Hi there, welcome to Kneppy Invests. Selfwealth released their Appendix 4C for the September quarter on October 6th at about 8:30 a.m. They were the first company to release their quarterly report for the September quarter, the first quarter for their financial year, beating out XRef by 1 hour. No surprise, these were the first two companies to release their quarterly report. Traditionally, these are the two companies that do it first. And not surprised they released it this early either. I've already done a video on XRef. Have a look out for that if you are interested in that company. They did provide another operational cash flow positive quarter. Unfortunately, Selfwealth did not. But even though they did not, I've decided to do a video on this company because, well, for a couple of reasons. First reason is I actually do use Selfwealth as my trading platform to buy and sell shares, and I do believe there is potential, if they do a lot of things right, that this could grow, or Selfwealth could grow quite a bit bigger over the next 5 to 10 years. Before we look at some other financial data for Selfwealth, including the financial year 21 results, just a few facts in regards to this business. Now, if you don't know who Selfwealth is, they are an online share trading platform, very similar to, say, CommSec. Now, when I started trading shares, I was using the CommSec platform. I still use it for a lot of non-trading stuff, so I do like the CommSec, the way they've set things out. But, a fee structure of $20 per trade for anything above $1,000, I think is way too much. And doesn't seem like they'll be changing that anytime soon. The fact that Selfwealth only charges $9.95 per trade is a good thing, or is a step in the right direction. But I do believe eventually some platform will provide zero fee trading. And if any platform does provide me that, I will automatically switch to that platform. Hopefully Selfwealth has that in the pipeline, maybe a few years down the track. And this will come. It's already happening around the world that these platforms are trading zero fees for any trades. Now, when you do a trade on these platforms, the cost to, say, Selfwealth or CommSec is extremely low. So their margins on every single trade are quite high, but they've been getting away with it for a while because no one really complains and hasn't been really any alternatives. But those alternatives are coming now. Selfwealth was founded in 2012 and they listed on the ASX in November 2017. The CEO is Kath Whitaker. She's been the CEO since April 2021, so that's about 6 months she's been the CEO. Now, the largest shareholder is LGGC Limited or something. As I dug into who that is, it is run by a guy called Lee Gaywood and a woman called Gemma Cooper. I think they could be partners. And just take the first letter of the initials of their names, and that's LGGC. I'm not sure if they have any link to Selfwealth, but they do own 8% of the company. So this is the largest shareholder of Selfwealth. The market cap of this company is 85 million. That's at 37 cents, and the ticker code is SWF. Before we have a look at the June and September quarter Appendix 4Cs, just have a look at the financial year 21 numbers. Revenue has more than doubled from financial year 20, from 7.8 million to 18.4 million. The company has become operational cash flow positive, losing $150,000 in financial year 20, now operational cash flow positive by 1.1 million. And the company is almost profitable, not quite there, but has improved by a fair bit from financial year 20, increasing, or not as bad, from $6.5 million loss to only a loss of $300,000. Cash on hand, 7.5 million. That's increased because they have done a capital raising in the last few months, about a $10 million capital raising. So it looks like the net cash has grown, and the price to sales ratio is not too stretched at 4.1. What I'm going to do now is look at the June quarter Appendix 4C and then just see how the company has performed over the past 3 months as we look at the September quarter quarterly report in the next slide. So operating cash flow for the fourth quarter, this is the June quarter, $5.1 million of receipts, and they were operational cash flow positive for the quarter of $140,000. They began the quarter with $7.4 million of cash and finished the quarter with $7.5 million. And the reason why they did increase cash on hand by the amount of operating cash flow is simply because they don't spend any money on financing and investing activities. So all the money they make in the operations goes to the bottom line, goes to the cash, and I love that sort of business. Now on to the first quarter for the financial year 22, and this is the September quarter numbers. Receipts to customers actually did increase from 5.1 million to 5.5 million. Now you might think, because our operational cash flow positive the previous quarter, they should be operational cash flow positive this quarter. However, they were not. They were in fact operational cash flow negative by $1.1 million. So what's going on here? Well, the simple fact is, if you take away the capital raising, which was $11.7 million capital raising, and because of that capital raising, they did increase the cash on hand from 7.5 million to 17.5 million. And the reason they were operational cash flow positive is because some of their costs increased by a fair bit. In fact, product manufacturing there was no change there, but advertising spending was up 730,000 from 300,000 to 1.1 million. So they're spending a lot more money on advertising and marketing. Staff costs increased by $500,000, and administration also increased by $500,000. So they're spending a lot more money, and unfortunately, the increase in receipts did not cover that increase in spending. They did mention in the commentary this was in line with the company's expectations, giving the focus on investing for growth following the capital raise in July. Now, I prefer a company to become operational cash flow positive and use the cash they produce in the operations to grow the company and not do capital raisings. Selfwealth Management have decided to go a different route, to do a capital raising to increase the money on hand and then start spending the money. And it doesn't really matter to them that they are operational cash flow negative because they've done that capital raising. I do prefer companies who want to become operational cash flow positive and then become self-sustainable in the future by using the money they produce in operations to grow their business. Selfwealth hasn't gone down that road. So it's one negative thing I do have about Selfwealth and the management. If we look at some of the key financial metrics for Selfwealth, this company is still growing at a fairly good rate. Active traders has grown from 57.8 thousand to over $100,000 in the last year. That's a growth of 86%. And even in the last quarter, it's grown at 13% from 95,000 to 107,000. Quarterly trades has grown at 15% per year from 379,000 to 435,000. And it has grown in the past quarter by 22%. And client cash has increased at 15% in the last quarter or 46% in the last year. So everything is still growing. I think there are concerns how these growth numbers will look in the next few years. There are more competitors out there, including Superhero, that's gaining traction, and even ComSec. Still, a lot of people still use ComSec for some reason, even though they have $20 trade. So Selfwealth is gaining traction, and there is potential that some of this growth may slow in the future, particularly if we do get a platform that charges much lower fees, potentially zero fees. And if that does happen, Selfwealth might have to change their strategy moving forward. Selfwealth was a beneficiary of the COVID-19 financial panic, fairly big beneficiary of the panic, because we saw a lot more trading, a lot more people became interested in investing, and we saw the receipts during that period really take off for Selfwealth. Now, if you look at the receipts history for the company going back to the March quarter 2017, we do see fairly good growth. In fact, receipts have grown from $4,000 in that first quarter to current receipts of 5.5 million. That's significant growth. In fact, if you do calculate the compound quarterly growth rate since March 2017, it's been growing at 31% per quarter. Now, that is off a low base. $4,000 is a low base, but if you do calculate the compound quarterly growth rate over the past 2 years, which is not off a low base, you do still get 17% per quarter. Now, you also have to take into account that we saw rapid growth in the first half of 2020. In fact, receipts grew from $2.1 million in the March quarter of 2020 and doubled to $4.2 million in the June quarter. And in fact, I was a little bit concerned in the September quarter 2020 because After you see rapid growth in receipts, a lot of times you will see receipts pull back, but receipts have continued to grow since then. So Selfwealth is still growing, and we have seen receipts over $5 million over the last 3 quarters. Now, if you look at the last 3 quarters, receipts may have gone sideways. $5.8 million in the March quarter this year, down to $5.1 million in the June quarter, and $5.5 million in this quarter. But overall, the trend is up, and this is a sort of receipts history I like to see for an investable company. I want to see receipts or revenue grow through time. As we turn our attention to the charts for Selfwealth, this is the weekly chart going back to when they listed on the ASX in 2017. And there's a very noticeable increase in share price from April 2020, when the share price was down to about 10 cents, all the way up to a high of 80 cents in August of that year. And that coincides with a period of time when the receipts of this company were taking off, when there was more trading on the markets. But ever since that high of 80 cents, the share price of Selfwealth has been under pressure. In fact, we did see a bit of a double top at around about 80 cents. The first top was in August of last year, and the second top was the start of this year. And the share price has fallen into a medium-term downtrend since then. Current share price is at 37 cents. We haven't seen a big increase in volume over the past few months. I would like to see volume increasing to show me that the market is getting excited about where the share price is at right now. I do think there is a little bit of skepticism around Selfwealth just because of the increase in competitors and the very fact that I think the increase in competitors and eventually zero fee trading will come into being. I do think there is a bit of skepticism around the long-term viability for Selfwealth. Onto the daily chart for Selfwealth. This goes back to June of 2020. You definitely can see a double top in the share price at 80 cents. The first time it reached that was in August of last year. And then again in February of this year, it reached 80 cents. That was on February 19 when Selfwealth released the half-year report. It was really interesting trading on that day because the share price actually opened up at open. So more than likely there were some retail investors who saw the report, got a little bit too excited about what they saw, and that does cause issues if you do get too excited and you decide to buy right on open, because there was a lot of selling pressure during the rest of the day. And in fact, instead of opening up for the day, or by the end of trading on that day, the share price actually finished down 11%. You never want to see that, because that shows you, as the day goes on, as people, investors, professionals have time to digest the report, they don't like what they see, and that's why we had selling pressure during that day. And that was the catalyst for the move of Selfwealth's share price from sort of a neutral trend into a medium to short-term downtrend. The share price has fallen consistently since then. In fact, it's fallen from the 70-cent range to a current share price of 37 cents. Exacerbating the share price movement into a downtrend was when they released their Appendix 4C on July the 12th. The market did not like that. Share price fell 12%. And the share price kept on falling until late August, when it reached a low of 30 cents. Whether that is a low or whether the share price might fall below that in the future, we'll have to wait and see. The share price has rallied since then, and right now is at 37 cents. Share price definitely has not moved into an uptrend. I'd say the share price is trying to move into a consolidation period between about 35 and 40 cents. If I do see the share price continuing to move sideways and Selfwealth releases some positive news, particularly financial news, that's when you might decide to buy in. At this point in time, I'm staying on the sidelines. I still have this company on my watch list, keeping a close eye to see what they do, what management decides to do in the future. I think it's very important because one of the reasons I do think they decided to increase their advertising and marketing spend is just the increase in competitors out there. And I think they just realized they really have to spend a bit more money to maintain the client base they do have and in fact increase that client base over the future. There is potential we might see even more competitors in the future, particularly if someone decides to bring zero fee trading into Australia. That's all I have for this September Quarter Appendix 4C video for Selfwealth. The first one for financial year 22. If you have any questions about this company, or better yet, if you have different thoughts than what I have I'd love to hear it, because just because I have a particular line of thinking in regards to a company doesn't mean I can't be persuaded to change those thoughts. So if you do have different thoughts, different ideas, I'd love to hear from them. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.